to all of you for coming to RCA. For those of you who might not know the panelists and guests today, RCA is the commercial arm of the Miami Association of Realtors, which is the largest real estate association in the world, 47,000 members, and the commercial arm is actually 2,000 members. So I wanted you to all know that even on this panel, and I want to thank the panelists here, I'll introduce them briefly, but they have had a part in RCA and they have been involved in the past. And so I want to thank you all. Wayne Ramoski with Cushman & Wakefield, SIOR, as the rest of the panelists are, and an industrial specialist. Chris Sutton with Flagler Logistics, SIOR as well, and also will talk to us about the trends in industrial, and Jose Juncadella with Fairtalk Partners. Thank you for being here.
Thank you, Maria.
So SIOR is actually one of the premier associations internationally, and they're celebrating their 75th anniversary. I was looking last night at their website, and they actually grew out of a need during the Second World War. The government needed warehouse space. So very fitting that our talk is about industrial. SIOR members specialize in office and industrial, or in both. This particular panel will focus on industrial, and I'd like each of you to tell us a little bit about your focus in particular. So Wayne, can we start with you?
Sure. Good morning. My name is Wayne Ramoski. I'm currently with Cushman & Wakefield. I've been with them for 20 years. I've been in the business close to 30 years, and I started out with a firm called the Doran Jason Group. Jose here was very instrumental in my hiring. I was choosing between a career in possibly the cable TV industry, being a cable guy, or going in the real estate business, and Jose made a very good pitch, and I decided to go to work with him in the firm. Was there about 5 years, and then went to go to work with Ed Easton at Easton & Associates, and then I landed at Cushman & Wakefield about 20 years ago. I specialize in industrial. We do agency leasing, we do sales, we do land sales, and we do some investment sales. So one great thing about the industrial service line, it enables you to kind of be a jack of all trades within that area. And it's been a good business, and I'm happy to be here today. Thank you.
Good morning. My name is Chris Sutton. I'm the Vice President of Development for Flagler Global Logistics, which is headquartered right here in Coral Gables. It's a subsidiary of Florida East Coast Industries, which is a subsidiary of Fortress Investment Group out of Wall Street. I handle the development of the core land portfolio for Flagler, which was acquired over the last 100 years, namely dating back all the way to when Henry Flagler was building a railroad from Jacksonville, ultimately to Key West. From there. Here in Miami-Dade, our 3 landmark projects, our South Florida Logistics Center, which is 200 acres adjacent to Miami International Airport. Flagler Station, which we're completing our final phase, which was about 100 acres there. And then County Line Corporate Park, right on the border of Broward in Miami-Dade off of I-75, south of where, say, the American Dream Miami Mega Mall is proposed to be located there. So I'm looking forward to the panel and talking about trends that I've seen over the last few years in this cycle that we've been in.
Jose?
Thank you. Thank you. Thank you for having me here. I'm so happy to be with my colleagues here at SIOR. I also started like Wayne over 30 years ago. I was happy to work with Wayne and years later with Chris. But my career started also at Doran Jason, which was probably the largest developer in Doral at that time. And then after 5 years with Doran Jason, I joined the Codina Group, which basically started developing the biggest business parks, industrial parks in Doral, with the name Beacon Lakes, Beacon Industrial Park, Beacon 97. If you see a Beacon name, those were the original business park, Class A business parks that were developed in the Doral area. Again, I'm with Fairtalk Partners. My specialty is industrial. I'm a co-principal with Maria of the firm. And my major development right now is Senator Gate at Granny, which is a project, 1.6 million square feet.
And we're going to ask you about that.
Okay,
So I
that's
won't-
fine. And we'll talk about it later, I guess.
Sure.
Anyway, thank you for being,
Thank you.
allowing me
Maria,
to be
Maria,
here.
if I can add, back when Jose and I started, there was no internet, there were no cell phones, and a PC was used to play solitaire. So the industry has really changed when you look at it today and how we transfer information and how
Yeah,
we do
but we had
business.
beepers then.
That's true.
Well, as we heard from Juan, the internet is even impacting the business directly. So,
Oh, absolutely.
So Chris, let me start with you and a development that most of us may be familiar with, Flagler Station. What trends and type of businesses are you seeing, and what? Tell us about the project and how it may have surprised you in the types of businesses that you're attracting and what it says about the market.
Well, you know, Flagler Station Phase 3 is 100 acres of a 1,000-acre business park that we started actively developing that back in, I'd say we started clearing it in the beginning of 2014, so not very long ago. And since then, we've either delivered or have under construction right now about 1.7 million square feet of distribution warehouse space. That's what we plan to do there. And in terms of surprises, I think that what I would point out, and I think it's an overall trend in the market as well, would be that almost every company, every building that we constructed had a food company in it of some sort. We put a lot more cold storage into those buildings, cooler space and freezers than we anticipated we were going to see, just because Flagler Station Phase 1 and Phase 2, which started being developed in 1989, there are food distribution companies that are there, but it's definitely not in every single building. And we're ultimately going to have 9 buildings there, and 7 of them will have some sort of cooler space in there. And then also, you know, to absorb 100 acres in a 2-year period, we needed to structure flexible transactions instead of just offering the market our typical traditional spec leasing product from there. So we did a variety of different transactions to include, we built a condo building, which was the first one, I think, in Flagler Station. We also did a few build-to-suits for lease and for sale, and then 6 spec buildings, which we leased up from there. And you know, I didn't find any surprises in the terms of the sizes of the tenants. There's a good mix between small 10,000 square foot industrial tenants up to 300,000 square foot users that'll go in there as well. But the one trend that, you know, I'll point out about Flagler Station, and then we can talk about it more during this conversation, would just be there's definitely a trend towards more cooler space for the distribution of food as Miami has become more of a hub for that in this market, I think.
Excellent. Okay, a question for the 3 of you, or anyone who wants to take the first stab. We think of Miami industrial market as a hot and important market, but undoubtedly it is smaller than LA, let's say, or Chicago. What do you think is the sweet spot as far as size requirements? Is there a lack of a specific product, let's say in the 20 to 30,000 range? And are there elements that make one development superior? Cross-docking, you know, the size of the truck ramp, or distances between buildings, etc. So it is kind of a long question, and but please let us know what has worked and what is lacking.
Well, I think, you know, the typical user in Miami is more in the 20 to 30,000 square feet. I think that's a sweet spot, if you were to call that. You know, that's what they look for. I mean, basically, the typical distribution tenant is looking for the height of the building, you know, the certain location where there's accessibility to the main ports that they serve. You know, it could be MIA, it could be the Port of Miami. They're looking for the amount of doors that they would have, you know, if they have a lot of volume going back and forth. And you mentioned, I mean, there's certain things like distance between buildings and all that has a lot to do with the the typical trucking, 60-some foot trucks and so forth. So that's what most tenants are looking for.
Is there a lack of a certain product that you feel we could have more of?
Well, yeah, I think, especially in Doral, I think there's demand for smaller, for the newer type of buildings that would be in the smaller range. I think most developers, and we can all confirm, except, Flagler, that is building buildings for the 20, 30,000 square footer, a lot of the new developments are building for very large users. The building depth is bigger, the size of the buildings are bigger. I think that, what is needed, let's say that there would be a huge demand, would be a smaller type of building to serve a smaller type of user.
I agree with Jose, and I think you kind of have to look at the question a little bit. There's a lot of small users that are in Miami that are in 2 to 5 to 10,000 square feet. But I think where our world is involved in right now are these institutional developers that are coming into South Florida, and they're building spec development product. That's the hot topic right now. And within that world, typically the bay sizes run plus or minus 10,000 square feet, so you're able to divide a building down to 15 or 20,000 square feet at its minimum. And obviously there's a lot of smaller users and larger, so we do see a lot of velocity in that under 25,000 square foot range. And developers are catering to that. If you look at other markets in the country, buildings are much bigger, they're much deeper. Here, we build a pretty good sized building, but we're very concerned about the depth of the building, and as Jose mentioned, the amount of doors. And these tenants are looking for image as well. A lot of times they'll stretch a little bit, they'll go into a new building because they may be competing with a larger company and they're a small mom and pop local entity. So I think that all factors into the decision.
So that segues into my next question. The presence of REITs in South Florida, has that impacted the expectations and standards, which is I think what you alluded to? And are there barriers presently in the inventory to the REITs?
Well, that's a big question, and we probably don't have time to discuss that in detail. But the REITs have really changed our world, and they came into South Florida within the last 15 years. Would you guys agree? And basically, what they've done is I don't want to say they've pushed out the local developers, but their cost of capital and their hold strategy and the way they develop and hold is very different than a local developer would expect. So basically what's happened is the REITs have come in, and there's different classifications of whether they're private equity funds, public and private REITs. They could be fund managers that are investing insurance money or pension money. So the world has really changed, and it's brought in an institutional class of developer. And they're really here because Miami's a market that we'll probably discuss a little bit later. It's not going away. There's certain situational aspects of Miami that are going to keep it alive for a long time. So, the buildings that they develop in other areas of the country may be different than here, but they are bringing in some design amenities with respect to ceiling height, column spacing, truck courts, and other design aspects that they're seeing in other markets. In addition to that, they're also cross-selling other clients they have in different markets into this market.
Agree. I think that's what we are all seeing, big institutions owning actually most of the industrial market. Years ago when we started in the business, it used to be the Codinas, the Easton, the Adlers, those were the local developers. But as the year has passed and Miami becoming a prime, local location for these institutions, they're all here. They're all trying to get into this market, and not necessarily to buy the prime A product, they buy the B and C. So chances are, if you're dealing with a landlord out there, there's going to be an institution. And so, because they really dominate this market. But like Wayne has said, they have brought new technology in terms of the buildings that we're building. A lot of this institution owns millions of square feet around the nation. So they imitate the Class A, the new Class A that is being built here imitates a lot of what they're building the rest of the country. Good?
Yeah, on the REIT question, it is very interesting. Like Wayne and Jose mentioned, Flagler a few years ago was actually structured as a REIT, and we shifted gears a bit at some of our projects to take on more of a merchant development strategy. And with that goal being to monetize our land as fast as possible. So we needed to make sure that we were developing buildings that would cater to the institutional investor or REIT that would ultimately acquire those projects. So we're very cognizant of the standards that they have for buildings that they want in their core portfolio funds from there, because we want to maximize as much value as we can get out of our land from there. But just in the last 10 years, what I have noticed is that, you know, the introduction of the REIT into South Florida's industrial real estate market has definitely, you know, sparked a new Class A type of building from there. So now we're starting to see, well, it's common now for a Class A building to be 30-foot clear or higher and have all the other features. And then one thing on your last question that I would bring up that I just want to bring up to the group, I'm seeing a lot of it now, is that almost every larger RFP that we receive has some element of trailer spotting as well. So that's one thing that I'm seeing, you know, is usually in demand of trailer parking, because usually here in South Florida, when we build buildings, we don't, you know, include additional land for the company to park their fleet of containers that don't, you know, have a spot at their dock doors from there. So going into, like, I'm seeing that that's pretty common in the rest of the United States, though in other markets you'll see that. And I think that will, just like the Class A market gradually grew from 20 to 24 to 28 to 30 to 32-foot clear, like that, we'll start seeing developers having to account for trailer spotting as well in the very near future.
Which is challenging in South Florida because we precisely have, you know, limited land.
That's right. That's right.
So Wayne, what can you tell us about your recent Nutralogics deal? The first tenant in Airport North Logistics Park, why did they choose that space in particular?
Well, first of all, I'm very happy to get it leased.
Congrats.
And how long did that lease take?
A little while.
Yeah.
Subsequently, we leased the balance of the building yesterday. So we're very happy about that. We secured our second tenant for the building. We're positioning this project, Airport North Logistic Park is a 1 million square foot project, but it's within an area that's going to support probably close to 3.5 million to 4 million square feet of space. And the location is at 74th Street and the Palmetto Expressway, plus or minus. And as development is pushed west of the Turnpike, as it's pushed into Medley and Hialeah Gardens, and other than Chris's project close to the airport, which is unique in itself, this is providing sort of an alternative location to, you know, traditionally what we've known as Doral. It's a little bit north of there. So I think when Nutralogistics looked at the project, they have a project in Doral already, but they wanted a new 30-foot clear modern amenity building, and they liked the location. And the location is currently under development. There's road infrastructure that's going in, and I think they just saw the value, you know, in what was going to come, and they moved in on that basis. So we're happy to have them. And then the second tenant that we secured is a window manufacturer by the name of Echo Windows, and they leased the balance of 150,000 square feet in the building. And they're going to have a manufacturing and distribution facility there.
Wonderful.
Thank you.
Jose, what can you tell us about the features of Center Grade at Gratney 2, and what type of tenants do you see that those features attracting?
Okay, Center Grade at Gratney is a 1.6 million square foot industrial park. It's owned by Prudential. We have right now developing 2 buildings on spec, which is a total of 602,000 square feet. I believe it's the largest spec development, industrial development in South Florida ever, unless you know of any other. But that's the confidence that institutions have right now in the market, which is 90-some% leased up. So what are the features? A lot of the features we have discussed here is a new generation, a new paradigm in terms of industrial development, which is buildings that are 30 or 32, 36 feet high. In our particular case, we have a 32-foot clear building, twin 300,000 square foot buildings. The column spacing, some of you may not understand, but it's a 54 is the new standard versus the old 40 for standard, what a 54-foot column spacing allow you is a 3-aisle, 6-rack system, which is much more efficient than the old system, as well as the SFR sprinkler system. So basically, these buildings have the bells and whistles of, in terms of a new building. It is well located. It's in an area of Hialeah that development stopped many years ago when there was no more land. It's located on the Gradney Expressway and Layun Road. And companies, we have adjacent UPS. We have the United States Postal Service less than a mile away. Major tenants within the park already, like Carnival Cruise Lines that Wayne and I did that deal some years ago, and as well as Bullet Line and Caterpillar Logistics. The type of tenants that we're looking at are e-commerce type of tenants, distribution tenants, manufacturing tenants. Hialeah is a very strong labor market, so we're seeing a lot of companies within the Hialeah market looking to upgrade their buildings. And by upgrading their building, it's not an aesthetic, look to the new buildings, but it has a lot to do with efficiency. A company that would normally be in 200,000 square feet can now be in 150,000 square feet in a new building and pay the same rents that they would pay on a Class B building. So that's what they find attractive.
Yeah. And we see that trend of efficiency everywhere, even in office, that you're right-sizing and using technology and newer features just to be able to reduce that footprint and pay for a lower amount of square footage. So Chris, back to cold storage and the fact that it used to be a niche market. Please talk to us about Flagler Fresh and a little bit more about what you just started to talk about before and how you see that. Do you see that as a growing trend? And give us a little more details on what it takes to equip a facility with that type of cold storage.
So I'll start with Flagler Fresh on that, Maria. A couple of years ago, we decided that to even further maximize the amount of value that we could extract out of our land portfolio that we had, we thought it would be worthwhile for us to leverage our experience in intermodal transportation. Many of you may know that our sister company that's also owned by Fortress Investment Group is the Florida East Coast Railroad. And then also our experience as an industrial real estate developer as well, to leverage that together and to provide a logistics solution to companies on a public warehousing basis with an emphasis on the distribution of food. So Flagler Global Logistics was formed out of that, and one of their service offerings is called Flagler Fresh, where they provide cold chain, supply chain services in terms of cold storage, repackaging operations, and a patented fumigation process as well, with our clients being mainly the importers and the growers of perishables that come through Miami International Airport's cargo terminals, and also Port Everglades and Port Miami. And it's been very successful to get into that part of the logistics world rather than just providing a railroad service or just being the developer of the real estate from there. It's become very, very interesting for us because some of the clients that we've obtained, we've been able to customize a real estate and a logistics solution for them, where they'll have a permanent home in one of our buildings, but then our company will also provide them with logistics services from there. We've had dry logistics companies distributing no perishables at all that have opened up that part of their business with us providing it to them on a third-party logistics basis from there. Most of that has gone on at South Florida Logistics Center, but we're now also expanding that into other markets now as well. And our success with that got us to start thinking about, from a real estate perspective, looking at cold storage as a niche to absorb our properties a lot faster as well and speed up the leasing of our spec buildings that we traditionally build. And it's a very expensive improvement to put into the building, but we found that there's a extreme demand for it, and there's a lack of supply in the market if we wanted to go and look for Class A cold storage space that was available, and it'd be a very short tour today from there. So what we did is we started marketing our properties and telling other tenants that were looking for cold storage to just consider the dry shell building that they were looking at to already have the cold storage in there, and we would capitalize it and offer it to them in the market from there. So I think that that concept has really helped us to win more business, and it speaks more to how Miami is growing in the perishables business. We already have, I would say, 90% of all of the flowers that are imported into the United States coming through Miami International Airport, and the other portions of the food business are growing like crazy. And also, we're going to start seeing the pharmaceutical and life science sectors start growing as well, which will have further demand for cold storage space as well.
Excellent. Okay, so most of us may deal with smaller users. What would you say are the biggest issues facing the 20,000 square foot and under industrial tenant?
Well, I would just quickly point out with that, a lot of times we'll find a 50,000 square foot user or say a 30,000 square foot user that, rental rates in this market are charged on the square foot basis, and they find that they can go down to 20,000 square feet, Maria, and get into a nicer, newer building, and on a cubic volume basis, they have more pallet positions that they can fit in there, so they're getting more efficient. However, you have to take into account the cost to retool, and you have to get new racking that can support the higher ceiling heights, and also new forklifts. So material handling equipment becomes a big expense for the 20,000 square foot user going into a newer Class A generation building.
I don't even think they're called forklifts. I mean,
it's changed quite a bit.
Extremely, yeah. Right. Okay, and lastly, what advice would you all have? I have to try to wrap it up. For brokers starting in the business, what would you advise them, specific type of deals to focus to put food on the table? Any of you? I know you have a long track record, but if you could advise a younger.
I'll be brief on that one. I think, first of all, you have to educate yourself. I think finding a mentor or a senior partner to work with or a team is very helpful when you're starting out. And I think that you need to be sincere and helpful. And our business has really changed from being real estate brokers to an advisor. I know that's a broad term, but we advise in a lot of different ways, not only when it comes time to make a transaction, but how to create efficiencies in their operation, cut costs. So I think all those things wrapped together will help someone young get started in the business.
I would say,
and talk to Jose.
I was going to say, you got to give Wayne or Jose a call. That'd be the first thing you should do. But Wayne brings up a great point about having a mentor. And I believe that to be successful in the brokerage business, no one's going to make it without someone taking an interest in you and you being able to provide value back. And that's through your work ethic and also being an information junkie, because the more busy we get as more seasoned veterans of brokerage, the harder it is to track everything. And that's the way for a newcomer to the business to get a foothold, would be to have market knowledge, work hard, and have good ethics from there. So I'd point that out.
And I think I agree with what we said here. I think sometimes what we notice, young people starting in the business, the people, they don't have to be young, but getting into the industrial business, that they do not educate themselves. I don't think our business is rocket science. I don't think anything we do is extremely difficult. What I find it difficult to find, to deal with, is that there's so much information available in Google on what to do, or buildings and racking and all that, that my advice, in addition to a mentor, which is obviously very important, is if you're getting a listing, an industrial building, or if you're representing a tenant because you fell in and you want to get in the business, it's very easy to add value by way of education. And I think that's what brokers need to do, is add value, make every deal, look at every deal and advise their clients, because that's what we are, like we're saying, and you have to train and educate yourself for that.
I'd like to take a couple questions from the audience, but very quickly, when do you anticipate, being that we are hearing that the Panama Canal expansion, that's going to go down somewhere June 26th is the last date I saw. If there is no further delays, when do you anticipate that impact on South Florida of the canal expansion? A year, 2 years? Just give me, I know the crystal ball is difficult to anticipate, but.
We have two sources of using and moving products. Number one is what we consume locally, and number two is what I call pass-through, what we export and import. I think the jury's still out on the improvements that were done to the Port of Miami. I think we'll grab a piece of that business. How much we will get, I think only the future knows.
I would agree with that.
Excellent. Any questions from the audience for our industrial panel?
Well, the REITs have been buying older buildings now for 10 years or more. When the Class A buildings sold out, basically they started buying the Class B buildings. But yeah, there's lack of land. There's only 16 miles between the Atlantic Ocean and the Everglades, and so there's very little land available. But developers are building land. There's lakes that are man-made lakes that are being filled. There's older sites that were never considered because environmental issues that are now considered for industrial development. What has happened with land value that have created some of these pieces of property being possibilities for development, because land values, well, forget about the REALTOR because they're over $30 a square foot, but in most markets now it's $15 to $20 a square foot. So with that land value, there's possibilities of getting more land. In terms of your question about higher buildings, in theory, that makes a lot of sense. We haven't seen it too much. A lot of the buildings that are in the market, Class C buildings, they have older obsolescences. They're very tight. They do not allow larger trucks. Their column spacing is an issue. Their amount of parking is an issue. So it's not only the height that will help those buildings. I think that over time, a lot of them are going to be redeveloped.
There's one more question. One more.
Chris is basically leasing everything that he's been building.
Right.
And Jose as well has just finished up a project. I think what's unique right now, very quickly, there's over a couple million square feet of space being developed. There's a dozen industrial parks in development. It's probably more space than we've ever seen in our careers. But on top of that, there's more large tenants in the market today than I think we've seen in 30 years. So I don't think we're going to be that dependent on the canal. I think we're going to be more dependent on what happens in the economy and what happens with interest rates.
If you were to take all of the new development that's under construction right now and then compare it to prospects that are in the market, which Wayne has mentioned, the under development properties are subscribed with prospects 2 and 3 times over, even without the Panama Canal expansion being opened yet. So the market, fundamentals are very strong for industrial in Miami right now.
Great. Thank you so much.
My pleasure.